Welcome to another episode of Mortgage Talk Mondays. I'm your host, Mason Kealy, where we believe apart from your family, your house and your mortgage are the biggest investments that you're going to make in your life, so it doesn't hurt to know a little bit more about them. Today, we're going to be interviewing Kory Dicks. He's a financial advisor with RBC in Langley in the Fraser Valley, and we're going to be talking about how people right now are, I was going to say profiting, but it's really not profiting. It's more reducing their interest expenses by switching their mortgages from one institution to another. So we're going to kind of go over how that works, how it affects you, and how you can benefit from it. So no further ado, let's invite Kory into the conversation and we'll have a discussion. Hey, Kory, welcome to the show. How are you doing today?
Really good, Mason. How are you?
I'm doing quite well. So I was telling our viewers that we're talking about mortgage switches. I know you deal a lot with it. Generally, in the aftermath, after us mortgage specialists process the whole thing, you guys got to kind of handle the whole picture as far as now they're switched, what happens to them. I kind of wanted to hear from your perspective, for the people that are switching mortgages, what are you seeing as far as, like the branch level goes?
Yeah. So once people have switched over their mortgage, I think the biggest thing that we want to do is kind of welcome them with open hands. So the biggest thing for us is make sure they're digitally set up for success. So for one, seeing that mortgage on their online banking, on their mobile app, so they can actually see what their mortgage balance is, their amortization and stuff like that, and be able to make payments onto their mortgage. I think it's extremely crucial that you have those options and be able to access that. So we want to make sure to assist them with that, and also to see where their banking is. We would love to assist them with having their banking here. Honestly, the biggest thing that we want to do is help them out with their goals. So if it's consolidating debt, if it's saving towards a goal, saving towards a post-secondary school for their children, we just want to be able to assist them with those transactions and their goals. So that's the biggest thing we want to do at first point of contact.
Okay. Yeah. Well, actually, that's interesting. You mentioned the getting digital. I can remember just like 10 years ago, my dad refused to get a smartphone. He's like, no, I'm only using the flip phone. And, I got time to figure all that out when I retire, right? But, I'm seeing all my clients now, like I'll suggest to them, hey, we're doing the mortgage. I'll send you, documents via DigiSign so they can sign it. No problem. Like I haven't run into anyone going, oh, I want to get the paperwork and scan it. I guess probably because of COVID as well. People don't really want to be meeting up as much. But, yeah, definitely the digital options are becoming popular.
Totally, yeah. And I think, like I was saying prior, is being able to, change your payments, skip payments, adding, doing additional payments onto your mortgage. To be able to do it through your online banking, it's crazy. And two, later on when we build up that relationship, renewing that mortgage, to be able to do that through your online banking without coming into the branch for you and your spouse to sign documents all through online banking. It saves you on time, so you can spend time with your family and do other important things.
So one of the things that I always tell everybody, mortgages are really the biggest investment you'll ever make, right? I mean, they're hundreds of thousands of dollars, right? And most of us aren't making that every year, right? So it's a huge investment, and it's really important that you understand what's going on. When I do a mortgage switch for someone, some of the main reasons I'm doing it these days is because of the rates. The rates are so low. Maybe they got their mortgage, 4 years ago, and they're sitting at 3.19, right? And now they're getting 1.85 or something, right? So they want to get that awesome rate. But some of the things they don't think about is not only can you benefit from that rate, but kind of similar to what you were saying before, they can use that, since you're refinancing anyways, they can use some of that equity in the property So like, consolidate debt. You lower their monthly payments. Or I guess, if your property's gone up a lot, you even see people taking out some money for, buying an investment property.
Yeah, totally. Yeah. There's so many different ways that you can look to do it. And one of the biggest things I've been helping clients, especially right now during COVID, was consolidating debts. You're looking at, credit cards, line of credit rates, a lot higher than what your mortgage rates right now, getting to really low, below 2%. On a term is unheard of. So being able to consolidate your debt so you can free up some cash flow and use that for other needs, if it's saving towards retirement or whatever it may be, putting your money so it actually earns more rather than just consolidating or paying off high interest debt. So it's really important to see, weigh your options to see, if I were to pay off the credit card or the loan or the line of credit, what does that do for my cash flow? And then what can I do with that additional cash flow down the road? If it's saving, even just paying off your mortgage faster, whatever is the most important to you, we want to be able to assist.
So that's, and I know you can't give us any specifics here, but that does come up a lot. Like say someone, they're switching, and say in order to do that, they want to consolidate some things and they have to pay out and close some credit cards. If someone's switching over a mortgage and we do the handoff to you guys at the branch and you sit down and kind of do a full plan with them, how hard is it for you guys to get those supplementals, like get them a new credit card or set up a new TFSA or switch over their RESPs, like all those other smaller things that they're smaller, but they're still important. Like how difficult is that process to get them kind of all focused again and get everything in order? Because moving a mortgage tends to be a big upheaval for a lot of people.
Totally, yeah. It really depends on the products that you're looking to switch over, but regardless of all of them, it's an investment, a line of credit or a credit card that we're looking to bring over or get a brand new one. The process is very simple, especially now with the new tools during COVID. We can sign documents electronically. We can do all the transfer papers or whatever it may be. Pretty simple. So it depends on what you're looking to bring over or what you're looking to get. But like you're saying too, the biggest thing we want is to build a relationship with every client that when they move their mortgage over to RBC, see what they're looking to get, how can we assist them, build that relationship. So if they have any questions, that we're here to support them. And then if they do need the credit card, the RESP or whatever it may be, that we partner up with the right people to make sure they get those.
Is it a little easier to get a credit card once you've got a mortgage with the bank? Or is it all just kind of case by case?
Yeah, it's hard to say. I would say definitely for sure it's easier to get approved since the mortgage is with RBC, because that's the biggest asset, the biggest liability that most Canadians have. So to trust RBC with a mortgage, it definitely helps out to apply for your credit cards with RBC. It's a case by case scenario though at the end of the day, but it definitely does help out for sure.
So I know I'm very much focused on mortgages, but, as a financial advisor at the branch, with all this COVID craziness going on right now, what are you seeing as like the big activities that are happening, the things people are really wanting?
I think I can name a couple, but for sure the one is getting back on track. So during COVID, mixed up a lot of people. Some people lost their job and now are back at work. So consolidating debts, like we were saying prior, onto their mortgage. Also, too, a lot of people are doing renovations. So, you can't go out, you can't do anything. So might as well renovate the house. Sure. So doing improvements on the property is something that we're seeing a lot of. So doing increases to their existing products. Also, a lot of people got interrupted with their savings patterns, weren't sure what their income's going to look like, so they stopped their savings. So getting back on track around those savings goals. So I honestly, to sum it up, it's getting people back on their goals. And yeah, so from there, we're just trying to understand where they're currently at, where they want to get to. And then from there, we can assist them.
You had me when you said renovations, but those always take longer than you expect, and always more money too, right?
Oh, totally. Yeah. It's and it's funny because we think it's going to cost a certain amount, and it ends up always being more. So we try to put them up for a worst case scenario, and if they have more than they needed, then that's perfect, right?
You know, this actually came up in a conversation that I had with a customer yesterday, because they were coming to me with a rate, and they were saying, well, you know, this broker can offer me, you know, the super low rate, right? And I mentioned to them, I said, you know, be careful about just looking at the rate, because it's just one component, right? I should probably do a full episode just on this, like how to recognize what the mortgage does for you. But have you had any experiences with people that come in that have stories about, you know, maybe the discount brokers or whatnot? I mean, you don't have to be specific or anything, but.
Mm-hmm. Yeah, totally. There's always going to be someone that may have a lower rate. There's terms and conditions that come with that rate. So it's not a straight apples to apples comparison. If we were to do just rates, it's the product that really what you're in. We take a lot of things in components for like your amortization. Yeah, we also look at your goals. We're looking at how much you're paying down your mortgage. There's so many different things that we look at. Rather than just a rate, right? So we can't just compare apples to apples off of that, because there's so many more parts of having your mortgage with RBC that I think most Canadians don't even know, and aren't taking advantage of that, right? So I think, honestly speaking to your advisor, seeing what you guys can do, the benefits of having your mortgage with RBC is crucial.
Now, we were talking more about, you know, people are becoming more digitally capable, I guess, right? And I mean, if you've seen the statistics out there for how many Canadians actually have a financial plan in place, the numbers are so low, right? I don't know if it's just a low priority, or people feel you know, intimidated by the process. But you guys have something called My Advisor at the branch, right? Like, is that something that they do with you, or is that something they do by themselves online? Like, how does that help people? Because people probably don't know about it.
Totally. And to answer your question, I think it's in the beginning, it's a little bit of a mix of both. It's a lot of people feel intimidated because it could be so far away, or they think they'll never get there. So it can definitely be intimidating, but yeah, we have this tool called My Advisor. It's kind of it works both ways. So it's definitely client interactive. So you can play around with numbers and see, you know, if I were to save X amount of dollars, what does that do towards my goal? How does it help out? For an example, for retirement, if I'm saving $500 a month, what does that do towards my retirement income? But it also helps us illustrate too some different practices on saving. So if it's disciplined approach of saving more, maybe changing your goal, maybe retiring later, taking less in retirement, maybe changing risk tolerances. We use so many different disciplines within My Advisor to help people towards their goals. But this tool is absolutely amazing. I think it's great for clients to understand, based off what I'm saving right now, what CPP, what's OA security, what my pension, what's my RSPs really going to do for me in retirement. And then from there, we can say, is that enough? Do we need to save more? And kind of back it up and really build out that plan from there.
So how at what age would you suggest someone actually comes in and puts one of those plans together?
Honestly, the sooner the better. It's a really good question. I see clients as early as when they turn 19, age of majority. I have clients all the way up to 50s and their 60s that are coming to see me, because you have the young ones that are coming in, that the earlier you save, the better. It means you don't have to save as much until you get to retirement. We really want to get those goals set in place, down payment on home, getting those structured savings plans set up. And then as we get older, it's reviewing those goals. And as they retire or getting closer to retirement, is based off what you saved in the past, is this going to be enough? Do we need to work a little bit longer, and going from there, right? So there's honestly, it's any age, the sooner the better, because it just only benefits yourself at the end of the day. And we want to be alongside your guys' the client's goals, and to make sure that they can actually achieve their goals in life.
So if you're like a 20-year-old and you think, okay, you know what, I'm 20, I'm going to go to university, I'm going to get a degree, and then I want to buy a house, right? Mm-hmm. You can plan out like 4 years and stuff like that to know how much you're going to need as like a down blow. I mean, who knows what the housing market's going to be like in 4 years, right? But you can kind of plan, you know, how much you got to put away so you can hit that down payment goal.
Yeah, and honestly, the conversation starts at, you know, what are you looking to save for? So let's say it's an example of buying a home, and then we go into, okay, you know, roughly how much you want as a down payment. Are we buying a condo, townhouse, detached home? Because those numbers vary quite a bit, right? And down payment wise, they vary quite a bit. So understanding and being realistic is huge, because, you know, just all think when you're 20 to buy a detached home as your first home. And this market's a little bit harder, but we kind of break it down from there. So we be realistic. We're going to buy a home that's a detached home. You need to save X amount of dollars per year, and we have those numbers inflated with inflation. So if inflation is going to be going up more every year, so we show the numbers, and then if we get that amount, awesome. If not, we may need to change our goals to something a little bit smaller.
So I know the answer to this question, but I've got to ask it because it sounds very detailed. Like, it sounds like there's a lot of moving parts. It's a pretty big plan for people. How much does Kory charge to get that done for someone?
But you absolutely nothing. Time is the only thing, right? So at Royal Bank, we don't charge anything for our advice that we provide. It's all free. It's just time that you want to put in is the time that you get out of it.
So I knew that was the answer, but I knew people are thinking, okay, you know, what's the catch? You know, if I'm getting this big detailed plan on my life and Kory's spending like a whole day working on this with me, you know, people think, you know, how much does that cost? So I think it's important for people to know, you know, no matter what age you are, this doesn't cost you anything. This is like a free resource that you can use. And, you know, if your plan is you want to be, you know, talking to me in 3 or 4 years saying, hey, I want to buy my first house, this is an important first step, you know, a very important first step.
Completely, yeah. It's having your goal set first is the most important thing. And then from there, how do we get towards those goals? So we want to be along those your path, and we want to be able to assist you in achieving your goals. So taking time out of your day is, I think, extremely important to sit down with us.
So in closing, then, I got one more question. You know, just kind of with these crazy times right now, what's a really good tip and trick you can leave with the people for something maybe they can, like, I don't know, save some fees on or get a little advantage if they're a branch customer?
Good question. I would say, honestly, sit down with your advisor, book an appointment, and see what we can do for you. There's usually some way we can help you guys save on interest, save you on time, help your money earn more. There's always something. So I think booking an appointment is step one. And being realistic with your goals.
Excellent. Okay. Well, thank you very much, Kory. If anyone ever needs to get a hold of Kory, they happen to be in the Eastern Fraser Valley there in Langley. They can always reach out to me, or I'll put your contact information on here too, Kory. And thank you very much for coming out and spending some time with us. I appreciate it.
Awesome. Thank you so much for having me.